Shidim Shuri. All right, let's jump right into it. The first trading day of December, December 2nd, 2024. Let's take a look at some retail. Keep in mind the Black Friday and over the weekend, you see a lot of headlines. A lot of headlines. Booming. Booming Christmas shopping. Ay. We'll see. I don't even know what to say as far as the consumer and spending and the data. Not that I say the data is fake, but you should pay attention to the overall consumer spending and online. Online has been growing, was growing much bigger for many years, and then it exploded over the pandemic, which is understandable, right? Especially the lockdown of 2020, and then still somewhat lockdown or still scare mask wearing fools 2021. So those 2 years, those two Christmas shopping season was insanely big growth number, but it has come down the last few years, and the in-person sales are still pretty big in comparison to online, and in-person sales was fairly muted year over year. But we still have 23 days until Christmas, so too early really to say the consumer is fine, because there are some headlines out there that would say, this is just showing you that the consumer is still doing well. Stores are dumping things at deep discount, losing money on things that they're selling just to have cash flow. If you don't understand how a business is run, it's about cash flow. Okay. At some point, it's not about making a profit. It is, you gotta sell stuff to have the cash in order to make payrolls, pay down loans, and payment on rent, all that stuff. But I digress. Kohl's ugly number. Consumers not spending there. I'm sure if you ask them, they may even put out news. Let's see. Did they put out news about Christmas? Retailer brace for ho-hum Christmas. That was before the data. But we'll see. All I gotta say is that you see this 1 year chart, does this look like a healthy retailer? That being said, it did come down to a support. So if you want to buy garbage that can bounce in December, this might be it. Right? Let's take a look. 3-year chart. Yeah. It's ugly, but this is. Let me make that into a white line. Okay. It is significant. There you go. Resistant, and then it turned into this support stuff. The last thing you want to be is a support on a downtrend. It's not a good look, right? Yeah, it's nice that it bounced off this white line, but dang, that's just ugly. That is just ugly. But that being said, I don't think it's a bad idea. Now let's do another white line. Okay, this was right there. Now this to me is where you can turn bullish, or I would turn bullish. Okay, if I was looking at the chart right here, I don't think it's a bad idea to buy calls here. Not that I care to do it, and I'm not. Would I sell put spread? There's not enough juice. Let's see, 14 for a dime. Yeah, it's not for a naked put. 14 for a dime. But that's where I would do it. Okay, I'm not gonna sell anything above 14. But if it can break this right here, if it can fill the gap and get over this hump here, then it's good to go. But if you want to gamble, I mean, for low price stock like this, buying right now it's like just under 15. Is 10% return possible between now and Christmas? Yes, yes. You know me. Anything that potential 10% in the short term is not garbage. It's the garbage of an economy that hurt the stock, but Kohl's is a fairly decent retailer when it is not garbage economy. I don't shop there. I went there a few times for, God knows, maybe 10 years ago. It's not the kind of store that I go into. But I don't hate it here. Okay, it's worth a gamble here. Whether selling naked put at 14 to collect lunch money, or buy a few share and take a 10% pop for the gap fill. Yeah, it's there. There's money to be made going long there. All right. I've been watching ANF for quite some time. I like it, right? We talk. I first look at ANF back here on this crazy up here, and it was definitely a no chaser, right? No chaser, and then seemed like the 78.6 fib, somewhat, basically. But this is good support here. So, to me, is there any option? Yeah, it is. If there is juice, I think 127, 125 might be a good play. If I can get 20 cents for that $2 spread. Why 127? It's basically below the ref flow here. Okay, you can even draw a trend line if you want. If I want to. In fact, I'm gonna do it. Why talk about it, right? Oh, look at that. Look at that, see? Not random. So yeah, I like it. 127, 125 for 20 cents. I like it. If I can get 20 cents for it, okay? Now, would I take 18? Maybe. But I would not risk a higher spread. You know, I wouldn't chase like 130. You can. I won't. Because if you do 130, well, it's hard because, like I said, for now, the option premium is all wacky. With the way until it's open, but given the price range 130, yeah, see, it's no juice here. Even the 127, 125, okay, I can say 20 cents, but who knows what's gonna happen when the market open. From Friday to Monday, big decay in premium. That's why I tend to write or sell put spread on the Friday instead of wait until the Monday. Now, the only time when it is worth waiting to Monday or after is, of course, a bad Monday, right? If Monday is a bad day and this stock go down hard, then there'll be plenty of juice here. But for now, it might not be enough juice to do ANF, but I like it down here. Would I buy long, outright buy the share? The answer is yes, but it needs to come down. Okay, for me to outright buy the share, it needs to come down to at least the red flow, right? The highest I would consider paying is the 61.8 fib. Okay, that if you really want to own it, 140-ish would be the first spot, and then 134-ish would be another spot. But yeah, for now, we'll see what the option look like. Target, oh, but hey, the fact that it bounced above the gap down, that's pretty good. Okay, that's pretty good. Now this stock has had that history, right? Look, see this gap down? It doesn't stay down long. It drifts up. Now, if you bought on a dip, congratulations. Where should you take your profit? Up there? Okay, 137-ish. Yeah. What? Sure. Is closing the gap possible? Sure. But what would be the reason? Is target turnaround gonna happen overnight? No, absolutely not. Okay, don't drink that Kool-Aid that the economy is fine. It's not. Christmas shopping just started. In 20 days, a lot of these retailers can tell you that they have a really bad season. So, chill. All right, let's end on a positive note. I am the most bullish on silver today. Compared to the previous 3 stocks, this is it. I'll be buying silver today and selling put spread today. On the weakness right now is showing. Okay, I like silver here. I've been watching. I have not traded silver in a long time. I was mainly focused on gold and GDX, but silver for the first time in a while is showing me that it is the best buy in metals. Why? Why did I say that? Why am I so bullish on this? Let's compare it with GLD. Okay, so the purple line is GLD. For, as you can see, the normal movement is somewhat in line, in sync. It's not something that happens all the time. Okay, it's rare. It barely lasted for 2 months, going back the whole year. So there was a 2-month span where gold and silver move pretty much lockstep right there. And after that and before that, there are long periods of discrepancies of value. Here, silver way overpriced compared to gold. Yes, you see that? And what happened? Gold went up, silver underperformed. If you're buying silver and gold and you don't look at this as a comparison, you are stupid. I'll be very blunt about it, okay? Please don't go out there and buy because some guy on YouTube tell you that it's time silver. Please, use some common sense, right? And guess what? Look at where gold is right now. Okay, this is perhaps the biggest gap underperformed silver have had all year. Dare I say it? Biggest underperformed gap between the two right now all year, going back 12 months. So it is time. It is that time to buy SLV. Now is the time. Okay, for me, pre-market 27.6, I'm buying. Let's see. Options. Is there options? They are Wednesday option. They are Friday. They all kind of options, just like GLD. Okay, all kind of crazy stuff. Let's look at Friday. 27.5. I might do that too. I might buy some at 27.6 or whatever it is I can get pre-market. And then do a tight put spread. 27.5, 26.5. If I can get 15 cents or 18 cents on a dollar spread, I'm doing it. Okay, I'm doing it. I wouldn't mind. Yeah, I like that. We'll see. We'll see what the opening price is. If it's still the same, where I can get 20 cents on the 27.5, and then get 3 cents ish. Yeah, I love to get 17 to 18 cents on that $1 spread, and I would sell a couple. I would sell maybe 2 or 3. I like it here. Okay, I would not mind getting a sign. So the takeaway is, if you play SLV, pay attention to how it performed with GLD. Okay, there's time. Look, before you go, there are times where they, even though it's not completely lockstep, it was. Okay, between here, right here, and here, and here, it's basically lockstep. Okay, it moved in the same kind of direction and the same, pretty much with a few discrepancy here and there. It's not completely lockstep like this, but yeah, come on, you can't look. No one can take a look at this comparison and say that silver look majorly attractive right now all year compared to gold. All right, so that's it.